Blast Squad, what's going on with y'all, man? It's your boy Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And today, as you can see from the title, we are here to talk about how to read candlestick charts. And we're going to be on the computer today because it's just going to be a lot easier to show y'all exactly how to do this. But this is the basics, the bare bone basics, step one of understanding how to trade stocks, how the market moves. So make sure you share this video if anybody you know is trying to get into trading and investing, because this is the very first video you need to start on right here. Step number one, how to read candlestick charts. All right, so let's get into it. Make sure you leave a like as well, and also sub down below. Don't forget that as well. All right. So this is how the candlestick chart looks. As you can see from the previous one, you're going to have a lot of green candles, you're going to have a lot of red candles, and you're wondering, like, why is it all these lines here and different movements right here? And this is the breakdown of how everything looks. This is the explanation of it. So if we look at the red candle here, it opened right here and it closed right here. So what does that mean? So for a candlestick chart, it represents a certain period of time. So let's say you are on a 1 minute chart. It's going to represent, the candle is going to represent one minute of movement. If you're on a 1 day chart, the candle is going to represent 1 day of movement. And these time periods all, it just depends on which chart you're looking at. So when you go into your broker, it's going to maybe have a 5 day or 1 day or 1 minute or 10 minute. And you just analyze that based on what type of time period they give you. But for the candle, the open represents the beginning of that time period. This at the bottom here represents the close of that time period. So let's use the example. Let's say this is a 1 minute candle. So when the minute started, it opened here, opened right here. So let's say 9:30. At 9:30, it opened right here. And these wicks here represent the upper bound and the lower bound. So throughout this time period of 1 minute, let's say it started here and then it shot all the way up to here, and then it danced around, it was moving around, but at the low, it dropped all the way down here. But by the end of that minute, it ended up closing right here. So that represents the one candle. And that's how that works. So for the green candle, it opened at the bottom here. So it started right here in the 1 minute. It moved around throughout that 1 minute all the way down to here. It also moved all the way up to here. But in the end, it ended up closing right here for that 1 minute, that 1 minute time period. This can also be used for 1 day. Let's say within the day, it opened here, closed here, but then it fluctuated from the highs to low throughout that day. And that's how you read these candlesticks. They're very helpful determining how a chart moved throughout the day, throughout the week, just in the previous history. So let's look at this next thing here. So when we're looking at these different candlesticks, you're going to have different type of candles that come into play. So from our previous example here, we're able to see, okay, this one opened here and then it closed right here. This one opened here, fluctuated all the way up to here, but in the end it closed right here on the given time period. And same for these right here, opened here, closed here, but it fluctuated all the way up here. And this one is a very interesting one. So this one opened here and closed here at the same spot, but it fluctuated throughout this. So with these candlesticks, as you can see from the bullish and bearish strength, bullish represents green, which means the chart is going up. Bearish represents down, or what they call short, or these red candlesticks here. So when you hear bullish and bearish in the market, it means bulls mean it's going up, bears mean it's going down, just green and red. So what these candlesticks represent, they can represent strength. So when you're looking at a chart and you see this candlestick here, that means the bulls or the green or the longs were in control of this time period. They were able to push the stock price all the way up from here to here very easily. Less bullish would be if they pushed up from here to here, but they got all the way up here, but they came down a little bit. This will be a little bit weaker, where they pushed it all the way up to here, but they got rejected. So the price ended up coming down throughout that period. This one's a little bit more indecisive here, where it pushed up. It's still bullish, but it pushed up a little bit and came down. Pushed up a little bit and came fluctuated throughout this period. This one's an indecisive one, so we don't know which one this one is going. It pushed up, it pushed down, but we really don't know where. And then on the inverse of this just shows that the bears, or the price going down, is in charge here. And vice versa is the same thing we were showing for the bulls here. When stock price goes down, the same type of pressure is shown here. And these are very important when we're looking at the past to determine what's going to happen in the future. So if you see a candle like this one here, you can predict that the price may go up. And we're going to take a look at this in the next slide here. But you can predict that the price is going to go up because people did not like, people were excited to buy the price below this. It came down, but aggressively pushed up. So people were happy to buy that price. Maybe they thought it was a discount or something like that. In this scenario, people were very excited to buy the price. As it was going up, they were continuing to buy. So that's a good sign. Maybe that means that it could keep on going higher. And we could use this to kind of predict where the price is going to go in these stocks. And here's a example of that. So we're taking these candlesticks here. As we can see, the price opened here and then closed here, but in that time period it fluctuated from here to here. This one is a pretty strong one here. So it opened right here, closed right here. That's pretty strong, as we can see. This one's also decently strong. This one's decently strong as well on the downside. This one started to come up a little bit. So this had some green strength. People were buying this, and then it immediately got strong again and got rejected. So this is a very weak chart, how the price is coming down. But as we can see, we have a reversal right here. We can see this indecisive candle, which we took at like right here, where it's a neutral signal, where we're saying, okay, it's been really aggressive throughout this move here, but all of a sudden we get this indecisive candle, and then we get a really strong green candle, and then we can predict that the price potentially will go up from here because we got an indecisive candle, and then we got a very strong bullish candle or green candle or price that is going up candle, and then we see this potential direction. So this is we use these candlesticks to predict the possible direction. We're looking at how the buyers are coming in, we're looking at how the sellers are coming in, and we're looking at the strength of them based on how the candles look. And that's how you take a look at these candlestick charts. So this would be a great prediction of going up. So what I want to do, I want to take a look at some actual stock charts so we can get an idea of exactly what I'm talking about, just on a live chart. So let's take a look at the S&P 500 here. We're going to avoid this line here. I'm going to talk about this line in another video. So we're just going to remove this for right now. But this is considered the simple moving average. But we're not worried about that right now. So here is the S&P 500. This is the overall market. And as I said before, where we're looking at different time periods, we're going to change this to a 1 day. And when you're on your broker, you can see what type of time period each candle represents. But each of these candles represents a 1 day 1 day time period. So this movement happened in 1 day. So let's take this for example. We have this candlestick here. Start with this one here. Let's zoom in a little bit. So we have this candle here. It's a decently strong candle. It went up a little bit. The price went from, as we can see on the right side here, it went from 444.56, and it closed at 445.99. This one was also, the next day was also pretty strong, and consistently these days have been very strong days. Green candles, green candles. This one is an indecisive candle, so we're going to figure out, okay, which direction is this thing going to go? Because this is an indecisive candle. It's a neutral candle for what we discussed in that last PowerPoint there. But the indecisiveness continued to move up. It continued to go green. This one had a nice green push where the market came down a little bit and then pushed right back up to make a green candle. This one, we have our 2 red days. These were pretty strong red days, but it did continue to push up. But I do want to take a look at this one here. This is a very interesting level right here. I'm going to draw that out. Oh, 1 second. Draw that out there. Because this is when the bears or the red started taking control. So we got up here, it started pushing. And this is interesting because it rejected this level before. So when it got up to 470, it rejected this level pretty hard. So it got up here, we're getting a couple of red days, indecisive days, red days, aggressive pushing down. It pushed down. So we're looking at this level and say, okay, buyers did not want to buy here anymore. And then it came right back up here, and then they aggressively, as you can see from the candle, pushed all the way up and aggressively pushed down on this candle, and buyers said, no, we don't want to buy this anymore. So that's a signal how it came up twice. They said, no, we're not going any higher. No, we're not going any higher. Like with your parents, let's say, oh, you want to stay up. Like as a kid, you're thinking, okay, I want to stay up late. I want to stay up past 12 o'clock. And you say, Mom, Dad, can I stay up? And they say, no, you can't stay up. And then you come back, maybe walk away for a little bit, and you come back and ask them again, oh, can I stay up late? Can I stay up past 11, 12? And they say no. That's a firm no right there. They said no to you twice, and maybe you don't want to try it again. And same thing with this market. It was rejected twice by sellers. They said no, we're not going past 470. And they said it again. Buyers came down and tried again. They said no, we're not going past this level of 470. It came right back down. And then we have these really aggressive candles, nasty red candles that are really strong, as you can see. Look at the movement from here. They open from 462 and close all the way down at 455. This one opened at 461 and closed all the way at 450, which is, these are crazy aggressive moves here. But that's how you read candlestick charts. You're just taking a look at how they open. You're taking a look at the green and the red. Green means it's going up. Red means it's going down. White means it's indecisive. And you're seeing the open, the close, and how they fluctuated during that given time period. We can even take a look at this. Let's take a look at a 1 minute time period. So let's change it to a 1 minute. So this chart represents a 1 minute chart where this is the same exact stock chart. It just we closed in on the information a little bit more so we can see more detail of what's going on with this chart. So this is a 1 minute. So at 9:30, that looks a little ugly. At 9:30, it opened up here at 456, closed at 456.63, and it fluctuated here. And then we have this aggressive red candle, and then we have this long drop, and then it pushed back up. But that's how that works. That's how you read stock charts, how you understand the price movement, the price fluctuation, and you're able to go into detail of what happened in the past to help you predict the future. I'm going to go into detail a little bit more how to use these charts even more. I dabbled into it a little bit with the double rejection that we saw previously on that 1-day chart that we were looking at right here. This is called a resistance level here. But if you haven't watched that video, I already made a how to read support and resistance lines, so you can go into more detail how to understand stock charts and stock movements. But that's going to wrap it up. If you have any questions, let me know down in the comment section below. I'll be happy to break it down for you in the comments if you need it. But that's going to wrap it up. Make sure you leave a like on this video and share it with your friends. But it's been your boy, Blessed Applesauce. Stay blessed. And I'm going to see you next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.